Welcome to the CoStar News Hotels podcast. I am here with our monthly check-in for the Asia Pacific region, as usual, joined by STR's Jesper Palmqvist. And this month, our special guest, 2 months in a row with special guests, is City Development Limited, David Ling. David, how are you doing today?
Thank you. I'm doing great.
And Jesper, I assume that you're doing great despite the neck brace.
Yeah, that makes it sound like it's really dramatic. But yes, everything good here in Singapore. And thank you, David, for joining us. It's great to see you.
My pleasure.
So, Jesper, let's start with you. Hitting close to the end of the year now, approaching full year 2025. How is the data looking at this point?
That's right. I was thinking about it because obviously this time of year we say end of year, and we're just about a month until the end of year on the lunar year, right? So we're in the starting the last month of the year before we fire horse. I think is the next zodiac year. Yeah, but obviously
I'd have to check that.
Yeah, no, it's a fire horse. I'm pretty sure next year. So we'll have to ask David later if that's an auspicious year or not. But in terms of 25, obviously we've been saying that are we able to end with some positive growth? And I think that's as a whole in Asia Pacific, macro level is what we're seeing, right? As a whole, we're above 3% growth year to date when you factor in November and part of December. We always figured, regardless of summer or winter, depending where you are, there will be this correction, normalization, partially because what happened in Q4 last year, but we've definitely seen it. And I was up in China last week, in Guangdong, and then Thailand before that. And I think Thailand is one of those markets a lot of people look at that we can discuss as well. But that's definitely what we saw. You see these fluctuations. You need to take a step back. Sometimes it's good to narrow down. But in Thailand, October was the first month in 6 months that was positive growth in a lot of important markets. And then November, so it's a little bit precarious. But we always said December to February peak season there for all tourists was never going to be the issue. I made a comparison to all the hoteliers up in Phuket. Krabi is another very popular resort close to Phuket, and they're different. They're probably smaller, but Krabi is the kind of market that didn't suffer through low season. Like the last 3 years, it keeps growing. It's different capacity and size, and they have higher peak. But it's interesting. Source market is so critical to these Southeast Asian resort markets, and it was such a telling example when you compare Krabi, Phuket, Samui, and those markets. And I found that really interesting. But overall, pretty positive.
I do wonder on that source market piece whether, if the threats of Chinese travelers not going to Japan bear out to be true. Is a destination like Thailand poised to benefit because these outbound travelers are going to go somewhere, right?
Well, I suppose, and I ask you as well, David, there, because to me, what I'm hearing is, you see, Thailand has had the fallback from losing Chinese before this, right? And that was Phuket in particular and some Bangkok, right? And instead, the Chinese will go Korea, Vietnam, and other markets. I think the prime beneficiaries for any drop that might happen from the fallout with Japan, I think, is mostly others, and Thailand would hope to get a normalization of it, but not yet. How are you seeing it, David?
I should say that even November, we're having pretty good, pretty strong. For instance, at the Millennium Hilton in Bangkok, I just did a review with our general manager earlier this week. We had 90% occupancy for a 533 rooms hotel. So that's pretty good.
That's pretty good.
And the whole year, of course, there was the earthquake incident, and then of course with the Chinese travelers, there's kidnapping cases involving. So there's a little bit of bumps during the earlier part of the year. And I have to say, year to date, 80%. So that's pretty decent as well. So our thoughts is next year, we're hoping for some rebound as well, back to close to the mid-80s. That's Bangkok, in fact. Of course, right now, there's a bit of border skirmishes between Thailand and Cambodia as well. So far, so good. According to our general manager, it isn't really affected. So let's hope that things will calm down in the coming weeks.
And
it seems like, too, we're ready for things to calm down, right?
Yeah. But it's a good point there, because obviously a lot of countries have put out travel non-recommendations right to that area now of Thailand, which would include, say, Koh Chang. right? And, popular, more old-fashioned, but a very popular destination. So I would see some of those, but it's not heavily branded there on the east side of Thailand. So it would impact more individual properties and smaller, I suppose, right? That's why maybe you might even see an uptick there. People change the plans, David, like they stay at your Bangkok property or go somewhere else.
And we see that for Phuket as well. Phuket is, we're entering into we are in the high season now. So things are holding up well, in fact. Yeah, same as well. Yeah. And for the same matter, actually, I'm just looking at my data point here. Also in Korea, Korea's been really good as well. If I can just showcase again, just mention about Nine Tree Partners, 400 rooms hotel that we have in Seoul. November, 87% occupancy, rates now pushing beyond 200,000 won. When we bought it back in 2023, we would never have imagined that it will grow that fast. And of course, year to date as well, 90% occupancy. So Korea is still growing very strong. And of course, we might say that what's happening to our, again, going over to Japan, for instance, Osaka has been, we have properties in Osaka and in Tokyo. Osaka actually was been doing really well, especially with the Expo going in, the 6 months Expo that went in this year was really trending very strongly. And both Osaka and Tokyo, in fact, are still very strong. Tokyo is mid 80s, Osaka is high 80s. And we haven't seen much of impact from the so-called travel restriction from mainland China. So I suppose it's such a popular destination. Japan hasn't really felt it.
Yeah. And I feel like that was the vibe when we were discussing this last month, right? That it's so strong that there's a little bit of room to give in Japan. So, David, obviously, CDL, you guys have been so active lately. Give us the highlights of what you are really, excited about in terms of the recent activity you guys have been involved in.
Thank you. If I can just touch on a number of deals. In fact, the Holiday Inn, London Kensington High Street, which is complete on 1st of December. Is really exciting deal with the largest single asset transaction in the UK this year, £280 million. It's also the largest Holiday Inn hotel in Europe, in fact, 706 rooms.
I was going to say that those are pretty eye-popping numbers when you think of a Holiday Inn, but it's not a normal Holiday Inn.
Exactly.
What was the price per key there? Price per key?
It's pretty much, let's say, 400 plus £1,000 a key. So it's really, the adage of location. And today, if I may put it slightly relevant for me, in fact, for CDL is in fact location, timing, and product. If I were to say that location, of course, give an example of this Holiday Inn in London is really in the most affluent royal borough of Kensington and Chelsea. It's really convenient, highly accessible to tourist attractions and prime shopping. Timing actually is really about the fact that when the market emerged out of pandemic, then it got hit by high interest rates in 2023, 2024. But then, whereas now we sense the Bank of England continue to ease interest rates. So just yesterday, they announced 3.75% quarter per cut. And the product itself, the Holiday Inn, is probably the most recognized hotel brands globally with a huge customer base. Now, despite being the biggest box in Europe, it consistently enjoys occupancy of 97%, over 97%.
You're starting to make me think that all of your hotels average over 90% occupancy, which is pretty good business.
No, there's simply invest in key global cities.
Yeah,
in a prime location. There's no secret to that. And it's really, something that throw out £39 million annual income and over 6% yield. Now, if you look back in London, central London, if you buy a hotel there, before it would have been 5% cap. So we're entering into using a 6% cap, and the interest rates is easing. So again, it's really about location, timing, and the product itself.
And I love that comment there, because you say, like, for Korea, certainly it's such a different deal because there your timing was buying at perfect timing before this latest uptick, right? But you guys, and in London, you're buying now at high valuation, but still such a great yield. It doesn't feel like you guys, when you invest, that, I mean, you're not going to flip. You don't flip things quickly, right? You own a fairly long. You're pretty long term, right? Generally.
Historically, we're very long term, but again, we've had a lot of discussion about really how do we unlock values. And you've seen a number of transactions that happens this year. I mean, again, let's say we talk about Japan, for instance, when we invested in Japan in 2023, a little bit over 2 years ago, it was not an intention to sell bespoke Osaka Shinsaibashi. Wouldn't have dreamed about selling it within 2 years. But again, someone walking with a big check, we paid 8.5 billion yen. 2 years and a bit later, we sold for 14 billion yen.
Yeah.
So
yeah, make that deal.
So we make things happen as well. And of course, if I make a jump into, let's say, Singapore, on the 1st of September, you heard about us divesting out of South Beach development. CDL divested actually 50.1% stake in a $2.75 billion development. That's roughly about, Sean, that's roughly about $2.1 billion US dollar.
Mhm.
So again, this is a project that consists of JW Marriott, 634 rooms, grade 8 offices, and retail outlets. And really, it's quite a chunky amount of value to unlock. And so if we have that, then we can reinvest capital in, and gain growth opportunities we don't have boundaries at all, whether it's Asia,
Yeah.
Europe, or US.
Yeah.
So these are things we are getting on with it. And of course, it just so happened in the US, we divested out of 1250 Lakeside Sunnyvale, California. It's actually a 250 units multi-family development that we've sold also in November, in fact, for $143.5 million to a US-based institutional investors. So this is a project actually CDL developed, and they sit next to a 263-room M Social Hotel, which we are constructing now. It's actually expected to complete second half of next year. So we're constantly buying and selling really to create value, unlock values, and investing in growth opportunities.
I'm curious. Obviously, you talk a bit about divesting a little bit in the U.S. Is that just property specific? Is that kind of reflective of your outlook on the U.S., like on a macro level? Is it just a timing?
I think it's more of opportunity. We're driven by where to unlock opportunities. For instance, in the US, I'm actually looking at markets such as Dallas with Universal Studio coming. Atlanta, Austin, I think these are great cities to actually put our dollar in next, in fact. Yeah.
Get in now before the revamped convention center. It'll be perfect timing for you.
Yeah, that's good.
Like you were saying, I mean, you guys are everywhere. That takes quite a bit of expertise to be an everywhere all the time investor.
Yeah. And I think it's really impressive how you do that, David, how you cover so many different markets. And it says something about, have you had to change when you look at how, I mean, you used to look at a lot of markets and like you said, longer, but as you look for the value and flipping things a little bit faster, it puts a different kind of, not pressure, but like a skill set in yourself there, right?
I think it's really motivational to have our board very supportive of really about creating values, unlocking values. And, when we unlock values means we can reinvest in growth opportunities again. And that's what you'll see us continuing to do this. Really, it's really fascinating to do that. Yeah.
Which is interesting because you work for a Singaporean company that is very traditional historically, like you said. But that seems to be changing. South Beach it's a landmark. It's 10 years old, I'm thinking, when the whole AW was a couple of years later, right? But the hotel. But this is a huge project that you guys had first, and like to sell that. That's a huge difference.
Yeah, and of course you see that from time to time as well. I mean, just maybe 2-3 years ago, you heard that we've divested in the out of the Seoul Hilton Hotel as well. If I can touch a little bit, I know it's not a new deal, but on the other hand, that's one deal that we've acquired back in 1999. for a price of, if you can bear with me one moment, it's actually $213.5 million US. And we sold it off in 2021 for $913 million US. So just a little bit over 4 times the price. So when someone working with a big check, we will definitely consider. Yeah. Again, it's really about me coming into a company that has 35 years of experience investing in the global markets. I mean, Sean, if I may touch a little bit about the US markets, which I'm very fascinated, really key focus as well for us. Some of the landmark deals, in fact, the Plaza Hotel in New York, which we acquired with our JV partner, Prince, our lead of Saudi, back in 1995. $5 million US. In fact, from your esteemed President Donald Trump. And we sold it 9 years later in 2004 for US $675 million, double of what we paid for. So actually, Jesper, we do opportunistically, but yes, you are right in the sense that typically we want to grow and expand our portfolio and footprint. Yeah,
for sure. All right. So I think we've reached the point of the program where we typically focus a little bit on the headlines across the region, but you guys have kind of done that for me already a little bit. I do want to talk, since David, you brought it up already a little, and Jesper, we can talk about this too. It is interesting to me, and I don't think we've talked much about it on the podcast, how much monetary policy has been diverging across Asia Pacific. I mean, David, since you guys are a big investment group that looks all across the world, all across the region, I mean, how much does monetary policy kind of play into the attractiveness of a country or a market for you these days?
We have to look at all those factors as well, be it monetary policies, because it does affect the investment markets as well. And of course, for us, capital sources, flows, all those are key factors that would drive. And we touched a little bit about geopolitics as well. But I firmly believe the hospitality industry, not just because I'm in it. CDL is a very well diversified group that invests in commercial, residential, hospitality, across the board. But certainly the hospitality sector itself is one sector that is very resilient. So there's lots of opportunity to actually, if you know the game, Jesper, obviously you do as well, know the game. There is certain timing that you get in and out. And, it is very resilient. It's gone away with, of course, pandemic was really not a great time, but right after it was a huge pent-up demand that came back.
Yeah.
So it is one area that we look very closely, but all different factors as well that will influence our decision.
And Jesper, you're all over the place all the time talking to everybody. I mean, how big of a deal is monetary policy from market to market right now?
No, you're right. I mean, throughout the year, you've heard it. And I think it's interesting how that has affected on some of the countries. Because, go back 8 months ago, we all talk about tariffs starting and how is that going to impact. And there's enough both family money, and then you had so many new owners as well in Asia Pacific, and adding to the pension funds and institutional investors that was still keen to get in on, and diversifying portfolio was kind of what was happening this year. Like, people were unlocking exactly what David and the guys were doing, like unlocking value on some good deals in the last few years, but how people were able to shift and go like, I need some more hotels or fewer hotels. And central banks, people were always, and I suppose it was the same thing in 24, you're waiting on a decision on interest rates, you're waiting on this, and we didn't have the same inflation pressure as we had. So I think it almost felt like it was less of a factor. People were able to, not just through productivity in hotels, like in Japan and Korea, and making more money on the bottom line, but also just feeding through on getting deals, because we kept saying, cost of debt, it's high and everything, but then another deal comes. Because it was less about construction, right? Because people were more like, I'm not going to build, but I can flip X, Y, Z.
Yeah, I guess the irony in all of this is that the one market that's raising interest rates is where everybody wants to buy right now, right? I mean, I know interest rates in Japan are not high, but it's going in what you would assume is the wrong direction, and still people are throwing crazy money at David to get his Japanese hotels.
Yeah.
Yeah, no, it's true. But it's interesting. Throughout the year, I also look at, we said F&B was one of the hardest things this year in hotels, which kind of changed how people were. Should I outsource more, etc. And since we talked about for China to work, and since I was there last week, people sound like, all right. And Shenzhen is obviously doing better because it's different dynamics with Hong Kong, etc. But I tell you what, the end of the year now, November and December, Beijing, that struggles so much with F&B and hotel performance in the beginning as well, now finally had the first months since like January with ADR growth. So to see those big tier one cities finally turning around like we said they would, it's a great sign that the Chinese economy, and everyone I spoke to, yes, they have skin in the game and they want to be positive, but for 26 looks like, you know what, the economy, there will be more, because it is the last year of this current 5-year plan, right? Right? So it's the 15 5-year plan. So in this last year, we expect fiscal policies to turn some of this around in China for consumption to ease and turn around, which is a good sign for domestic travel and eventually, of course, as well outbound from China.
So Jesper, what do you want to talk about today? What's your topic of the moment?
Well, apart from China, when I looked around it, I suppose we can say to any listener, any country we don't mention, say I'm not talking Australia or Indonesia, is because nothing much is changing, right? In this, but it's not a bad thing. It's low and slow growth. It's kicking in there. That's fine. I think it's interesting to see Vietnam, how occupancy growth is now finally slowing down towards the end of the year, because it ends the year almost 20% up on RevPAR, because we had that big occupancy recovery earlier in the regional markets. But Vietnam is looking really solid for the next few years. I mean, that's the thing from Thailand, looking at competitively, how are they going to steal attention, share of wallet from that perspective. I'm glad that our forecast on Singapore, since you brought it up, David, but there was a lot of moaning 6-7 months ago, right? Oh my God, the new supply and rates were down. Occupancy was 5.5% up in November. Year to date is already above the line and will end positive in RevPAR. So Q4 is saving it. Like, so Singapore has, and I suppose when you look at your properties in Singapore, it feels like productivity is an all-time high. Your GMs are managing the bottom line better than ever, right? When my outlook for Singapore is like, yeah, we'll get another couple of points in growth next year. But how do you feel about that?
You know what? I just had the performance review with two of our properties. In fact, the St. Regis Hotel in Singapore, as well as Edition yesterday. It was all very easy and happy. Numbers up, occupancies up, very strong November. To your point, October was very strong with the Formula One. We can touch on that. And then followed by November, which is again pleasantly surprised. I like this sort of surprising news as well. It's really been, record high in terms of occupancy and revenue. I think the first half of December, it was still okay. It's maybe the second half, they said might slow down a bit, just save it for just Christmas and New Year where things are. So actually we are, to your point, Jesper, Singapore, it's a little bit of a lull in second quarter and third quarter, but then fourth quarter seems to be very strong. If I may also, because I got right as well last week, I just had a review with our properties in Australia. That's actually a pretty good market as well. I can speak a little bit more about Sofitel Brisbane, for instance, that we've also acquired about 2 years ago. Month of November, 88% occupancy, year to 85%. Rates still going up. That's one place. 2032 is Olympics, and the government is just rolling out a lot of infrastructure project there. So yes, there's lots of bright spots in Australia as well. So we're very happy as well.
Brisbane is so hot, like literally right now, because it's warm. But it's such a hot market, and obviously they will see the fourth Ashes week, which won't mean anything because the tourists will go home empty-handed once Adelaide closes, I'm pretty sure.
And we also don't want to see Brisbane take home a third consecutive premiership in the AFL.
That's right. You see, we can be very quick to bash on Brisbane and Matthew's hometown.
If Matthew was here, I would not say that. I would say, great,
That's right.
Great for your Lions. So yeah, we usually wrap up with a little bit of sports talk. David, you mentioned you guys recently hosted the F1. Now that was the season just wrapped up, and I know next to nothing about F1, but I'm wondering, like, I've chatted with Jesper about what that event is like in Singapore, and it seems like it's so much more than just a sporting event.
It is actually, it's uh, 18 years. The first inaugural event was in 2008, and it's more than just, in fact, the first night race in the world that is held in a major city. And apart from the race, it's actually a lot of entertainment activities that
Mhm.
goes around it. You got people from India, from Thailand, from Korea, Indonesia, all coming into it. I think last year was, the recent event in October was attracted over 300,000 visitors. And it's quite, again, it's quite it's also related to tourism as well, because then, hotels were charging rates that's about above $1,000, and, just amazing. It's one event that we spoke about a lot. And of course, again, I'm excited about it because there's quite a number of legendary, or really the Jesper, who is your favorite? I mean, Fernando Alonso won the first one, and then a couple
Yeah,
others.
it's gone through phases on that. Like now, and I fortunately, when we were up in China last week, we were able to put up a big screen and watch the season finale because F1 ended with such a bang this year. The Singapore race was at a good time of that because it was the recovery of Max coming back. But I'm a boy Lando fan. I love Lando. So to see him take it home last weekend was amazing. So, it was a long, interesting season, and Netflix will cash in on that like no tomorrow because it
Yeah,
was interesting season with ups and downs, right?
for sure. And it seems it's wild to me that pretty much every sport has that F1 style documentary series now. Like
Yeah,
all of them have it because it's
yeah.
such a huge success.
It's a good formula for sure, and I know it works.
Was that a pun? It's a good formula? Is it the number one formula?
But I mean, they know what they're doing. They find a good
Oh,
way of
yeah.
guessing these things, if it's football or hockey, whatever it is. And then we see, how Formula One has changed. The fan base has changed so much, and for Singapore and every market like that has that type of race, it's so different. When we
Mhm.
compare, hotel performance in these races, you can do it. Say Baku is obviously a slightly different market from an arrivals perspective, but the Middle East and Vegas and those markets where you travel in and the racetrack is in the city, you take advantage of the city, and Singapore where, STP does such a great job. And then if you go to Monza or Suzuka or something, those tracks are far away, and Sepang,
Yeah,
right? Far away from Singapore benefits like the entire city state, right? And that's the
yeah.
same with Vegas and other markets where they just benefit in such a different way from the
Mhm.
race.
So I'm assuming that the CDL plan of attack is to own a hotel in every market where there's a Formula One race,
Oh,
right?
that's a
Like,
great shout.
That's a great, Sean, that's really good. Great
all right.
formula.
You just stumble upon their strategic roadmap, Sean.
Maybe I did.
Oh my
That,
God.
that, that,
Based on
Good
the
to share
sounds of it,
also.
it'll
We, we
work. All
we will
right.
land in every Olympic city as well. That's the other
There
thing
we
as
go.
well. We just invested in Paris last year, and I can
Mhm.
tell you that's an amazing place. The
Oh,
Americans
I'm
love it, in
sure.
fact.
I'm absolutely sure it is.
Well,
All right.
congratulations on all the deals, David.
Yeah.
Thank you.
And thank you so much for taking the time. I really appreciate it, guys.
Thank you,
Thank
Sean
you.
and Jasper.
Have a
Appreciate
good
it
one.
as well. Yeah, great.
Hello, I'm Luke Haynes, People Newsletter Editor CoStar News, and the host of Top Credentials, a monthly podcast exploring the colourful careers of those working at the top of UK commercial real estate. In the episodes, we discover the valuable lessons influencing the daily decision-making of property sector leaders, and hear about the aspects of their job that make it a little easier to get out of bed each morning. We'll also ask for their views on the latest news and policies shaping our constantly evolving industry, and even get them to share a famous quote or song title they think defines their career or the profession. Listen on Apple Podcasts, Spotify, or wherever you get your podcasts.
This episode of the CoStar News Hotels podcast was recorded on December 18th, 2025, and edited by me, Sean McCracken. Head to costar.com/hotel news for more information on the global hotel industry, and look for all of our podcasts on Apple, Spotify, YouTube, or wherever you listen.